A lot is happening in the markets this week. Stock markets around the world saw huge falls on Monday, with ongoing fears of a US recession gripping global markets, triggering a share market decline that prompted investors across the world to unwind their positions simultaneously. This plunge has raised questions over whether investors are facing a historic share market crash, similar to the global financial crisis or Black Monday, or is it simply an overdue pullback after a stellar period of strong returns? So, what's causing this market meltdown? Well, volatile conditions erupted after the Fed hinted at an interest rate cut that could be coming in soon, and this seemed to initially be a stimulus for shares. However, gains quickly evaporated as investors reinterpreted the impending rate cuts as a sign that the world's biggest economy was faltering. Several pieces of economic data, including manufacturing, durable goods, and crucially jobs and payroll data, raised questions over the health of the US economy. What was hit hardest in this market crash? Shares, stock markets, and indices that had risen recently were the most likely to fall the furthest. The S&P 500 lost 3% on Monday, while the Nasdaq shed 3.43%. Though these were remarkable declines, they're more modest than initially predicted, raising the hopes of those that are looking for a sell-off and hoping it doesn't turn into a full-blown meltdown. Chipmaker Nvidia, which was also a big leader in robust returns in the tech sector, was also down as much as 15% on one point on Monday. Australia's share market also suffered its worst day since the onset of the pandemic, erasing more than £100 billion in value from its local stocks in one trading session. But it was Japan's Nikkei which came under the most extreme pressure. They plunged more than 12% on Monday before rebounding strongly early on Tuesday. So what happens next? Well, it's a bit too early to tell whether the selling pressure will reduce and these sharp falls are just a warning shot. The global recession concerns of recent years have been tied to a fear that cost of living pressure will eventually depress spending to such an extent that economies will shift into reverse. Subscribe to XTB to stay up to date with the latest on trading and investing.